Welcome to the BlockByte Weekly. This week, I'm going to cover a few of the factors that have continued to see Bitcoin, Ethereum, and some of the other altcoins continue to slide. Let's start off with the liquidity crunch that we're seeing in crypto. To understand this in detail, we actually need to go back to October 10th when the largest liquidation event in crypto occurred. Trump raised tariffs to 100%, or sorry, threatened to raise tariffs to 100% on China because they said they were going to restrict certain rare earths and technologies from being exported out of the country. And so what we saw was a $19 billion leverage wipeout in digital assets. And because of that, it's thinned a lot of liquidity that drives an order book. The consequence of thinner liquidity effectively means that it takes less volume on the buyer side or the sell side to move prices significantly. And so we're seeing a lot more volatility now, but because of some of the macro bearish sentiment, which I'm about to get into, it's actually exacerbated the downside momentum more than it otherwise normally would have. So let's jump into a few of those macro investing stories. The first one is this AI and investing bubble, which investors and economists like Ray Dalio and Howard Marks have spoken about. If we take a look at the forward price to earnings ratio of the S&P 500, we're currently at around 22.9. The historical 30-year average is 17.1. And by this sort of overarching metric, a lot of investors have said, hey, we're a little bit overvalued here. To counter that, you could say, actually, well, earnings are continuing to grow at a significant pace. And we've got in companies like NVIDIA that while they've received criticism around some of their revenues being circular in the AI ecosystem, they continue to beat expectations. And so we actually think while the market might be a little high, it's continuing to justify itself. The second major macro driver that we're seeing put a little bit of a dampener on digital asset prices is this yen carry trade unwind. Back in August 2024, Bitcoin fell 17% in a single day. And the reason is that the Bank of Japan hiked interest rates. Although the Bank of Japan hasn't hiked interest rates this time, because of the new stimulus package of $120 billion by Sanae Takaichi, it's weakening the yen. So because of that, Japanese bondholders are wanting a higher yield on those bonds. That increases the borrowing cost for foreign investors. And that means that those foreign investors that have borrowed yen to invest in US equities or digital assets are now selling those down to repay Japanese-based debt.